I would say to a lot of people out there, wouldn't know what an income statement or balance sheet really is, what it looks
Yep.
like. And I think it sounds a bit scary in accounting, and
Oh
yeah,
yeah.
a business, balance sheet might be a bit intimidating to look at if you're not accountancy trained. But when you look at your personal one, and anyone that's got into property full time and doing maybe commercial knows about producing income and expenditure statements and assets and liabilities. But what Robert Kiyosaki did in this book was really boil it down to the difference between somebody with one income stream, which is a job, and spending, and then an entrepreneurial mindset, seeing how assets provide the income, and then you spend what the assets provide, and your actual earned income goes into building assets. It's like building an extra step, and that again, I had to read that chapter a few times before it really sunk in. But that was the thing it was the bug in my head that I couldn't, get rid of. That eventually resurfaced 7 years later around a poolside in Kuala
Yeah.
Lumpur.
Yeah. I mean, I like, well, when I heard financial statement, yeah, that did put the fear into me, because I didn't know what a financial statement was. I mean, there we were having our own recruitment business, the recession killing it, and me thinking, what's a financial statement? I mean, that sounds mental in itself, that we had that business and didn't really know anything about financials. We just knew how to place people in jobs and then invoice for it. But the whole idea of that financial statement just being broken up into four boxes. Do you want me to share the
Yeah, why don't
screen?
you do a
For
screen
those of
share?
you on YouTube, you'll be able to see the um the image that I'm about to share. Well, I'm hoping. There we are. You can see here that you have the income box, the expenses box, the asset box, and the liabilities box. And depending on where you behave with money, the flow of money will be different for different mentalities. So if you have the poor mindset behind money, whatever comes in goes out. So
So that's
that
the
could
red
have,
line there on the screen for everyone who is
yeah.
on
So
YouTube. If you're not, you just
everyone,
have to imagine it. Um,
but the poor mentality has the money going into the income box and then over to the expenses box and then out the door.
yeah.
Then you have
An
the middle class.
example of that would be the very first commission check I got for my job in recruitment. So I was very excited. Got my first commission check, which was just over £1,000. This is back in 1997.
Ooh, big
What did I
bucks.
do with that £1,000? Did I put it in my bank account and wait for the next one and then go and put a deposit on a house, or did I go down to the local hi-fi shop and buy a Sony hi-fi for about just under £1,000? Which one do you think I did?
Was that with a tape deck?
It had a twin tape deck
Oh,
and
wow.
a MIDI system. It was
Woo.
awesome,
Yeah.
but it was probably worth about 10% of what I paid for it as soon as I walked it out the door and set up at home.
Yeah.
But I
Yeah.
loved it. But that was a poor mindset.
That
Like,
was a
wow, I've got
very,
some money in, great, I earned that. Let's go spend it. Let's go
yeah.
and buy something cool.
Yeah. Well, cool to you. Right.
Mm.
So the poor mentality, money in, money out, right? Then you've got the middle class mentality, which is the keeping up with the Joneses. The money comes into the income box. Then it goes right down into your liabilities box in the form of your mortgage, your car payments, the kids' school fees, the being a member of the golf club and going on the nice swishy holidays and buying the designer shoes and handbags. That's the bunch of liabilities down there. So then that equates to the expenses that you have, and then your money goes out that the door there. So even when you look at from the outside, looking at the middle class mentality, they've got the house, they've got the cars, they're going on the nice holidays, they're wearing all the bling bling. They look like they're winning in life. But actually, if you compare that to the poor mentality, it's the middle class mentality that are at most risk. Because if their income stops, then actually they've got a bunch of liabilities they need to service. Unlike the poor mentality, where, well, whatever goes in goes out. And if it doesn't come in, then I don't have anything to spend it on, right? So that middle class mentality is a very, very vulnerable place for you to be financially, on a monthly basis. But unfortunately for the middle class, they don't know that until something happens, like a redundancy or a recession, and their bonus gets cut, or the government comes in and changes tax legislation, which means they have to pay VAT on school fees or whatever, right?
And just be clear on this, when we're using these terms, poor, middle class, wealthy, we're talking, these are the terms that Robert Kiyosaki used in his book.
Yeah.
So don't read too much into what we're saying there. This is literally the terminology out of the book, just to give you an indication. It's just, rather than thinking of someone as middle class, it's the mindset, and it's
Yeah.
just a label for the mindset essentially.
Well, do you know what? I think that mindset as a word is used quite a lot and it's not very clear what it means. But actually, I've now been using the word attitude. So your attitude to money and how you then behave around that money will make you either in the poor category, the middle class category, or the wealthy category. So yeah, if you're not clear on what mindset is, it's not about being positive all the time. It's just about your attitude and behaviors. Then, of course, you've got the wealthy attitude or mindset to money, and that's whatever money comes in. And this is the big shift in change of behavior. Rather than um, paying your mortgage and having all your expenses, what you actually do is put it into your asset column. And it's the income from your assets that actually pays for all the bling bling down in the liability column. And your money goes out the door that way. So this gives you a degree of protection, security, that if the income stops, the liabilities are still serviced by the assets. But while that sounds fantastic, it means that you might need to sacrifice getting all the bling bling for a while you build up those income generating assets. So, this for me, I'm going to stop sharing now, is the diagram and the flow of cash and your attitude and behavior around money that really changed everything for me. Because there I was needing to place a candidate in a job to invoice to then get paid for me to then pay my living expenses. And everyone who's in a job, Robert Robert Kiyosaki says job stands for just over broke. It is literally paycheck to paycheck. They're roughly spending around 10% more than their paycheck, climbing that ladder, trying to get that pay increase to then cover that extra 10% that they're paying or spending. And that keeps them in what he calls the rat race or the hamster wheel, as I call it. Um, so the minute that the penny dropped on that for me, I'm like, okay, what are the income generating assets? Now, he talks about property, but I started thinking of as many different income generating assets that I could potentially access or invest in that would maybe diversify our income and have that multiple streams of income into your household. So I often say to my students, think about your household as a business. You might have a couple both going out and working hard in their jobs and they're bringing home two paychecks. So you have two income streams, but they're both active. You need to be exchanging one of your most valuable commodities, which is your time and your knowledge and skill, to then get paid every single month. If you can just use some of that income to transition over into a passive income stream, then suddenly the need and the pressure of having that active source of income suddenly wanes. And when you find that people are needing to go to that job on a day to day basis because they have all these commitments in their lives, suddenly the joy and the fun um, is not it's just not there anymore. And I think that's why we're seeing this mental health crisis around the world, is people, having followed that mentality that their parents taught them, which is go to school, get the best grades possible, go and get some higher education to get the, higher the education, the better the job.